Hi, everybody. Thanks for joining us for today's webinar. I'm Liz from Teikametrics. I've got my friend Yoni from GETIDA with me today, and we're going to talk about how Q4 is over, but you might still have money coming to you. And just a little bit about Teikametrics. We are right now optimizing over $6 billion worth of transactions for the largest brands on Amazon. We have a wonderful product called Flywheel. We are working on Flywheel 2.0, rolling that out to you very soon. We've got a self-serve tool. Yoni, welcome. Say hi to everybody.
Hi, everybody.
Thanks for joining me today. Tell me about GETIDA again.
You got it. Yeah. So in general, GETIDA, we're a technology company, and our claim to fame is our ability to help Amazon sellers get the maximum FBA reimbursements that they're eligible to get. So what is GETIDA? Is it GETIDA? Is it GETIDA? It doesn't really matter. It's an acronym. It stands for Get IDA, which in turn stands for Get Intelligent Data Analytics. It's also a little bit of a tribute to the world of auditing, because we're an auditor. Because the world of auditing, when you see something, it doesn't, if you dig in, you usually find more things. So if you dig into the name GETIDA, you find more meaning. So that's kind of a little bit of a tribute for the world of auditing. Essentially, we're a global leader in Amazon FBA auditing and reimbursements for the simple fact that we play on a global level. So if you sell in the Amazon US or Amazon UK or Amazon Germany, we can help you there as well. Not a problem. We are an award-winning company. We won the gold award from the American Business Awards for our dashboard technology, because essentially we connect between technology and services. Because once our technology finds an issue and discrepancies, our service team actually kicks into gear and opens cases on your behalf and manages all the back and forth flow with Amazon until the things are resolved. And all their activity, this army of people working for you, you're able to go into a dashboard and see the progress. Cases that have been open. What's the status of each case? Is it paid, not paid? Is it pending? How much money was received in the past 30 days, 60 days? So bridging between the human and the digital is something that we won a prize for, and we're kind of proud of about it. Also, as I just mentioned, we have a dedicated team of claim specialists working on your behalf. A big part of our team are ex-Amazon employees who used to work in the FBA reimbursements department. So we know what we're looking for, how to present the issues, how to handle the cases, and how to stay compliant throughout every step of the way. We actually track and monitor our recovery rate. And our recovery rate at the moment, it's about 70%. So for every 4 cases that we're going to open on your behalf, about 3 of them will be paid and reimbursed. And we like to make our solutions affordable for sellers of all size and any stage of the life cycle. If you're just beginning, or if you're the top 20 and doing over 200 million a year, that's fine as well, because we don't charge any subscription fees. We don't charge any retainers and no payment up front. You can cancel and leave us at any time, not a problem. And we only charge a fee from successful recoveries. It's a model that we call PPR, paper recovery only. So only if you were able to get money back, that wasn't available to you before, let's say $100, our fee is 25%. So in turn, it will be about $25. So the idea is that we're going to go back, on your account. Usually it's up to 18 months. Anything that was left behind, either, because you never even heard about this problem, like, of discrepancies, or even if you have your own team, but whatever they missed out, we're going to be able to back you up and bring that value back to your pocket, so it doesn't go, away to go to waste. So that's in a quick run about GETIDA, the purpose, the meaning, and the value.
Awesome. A little bit of housekeeping before we get deep into the content. I see that I think the roll-in number has slowed a little, and think most people are here now. So if you have questions, please pop them into the Q&A section of GoToWebinar. The session is being recorded and will be emailed to you probably later today, maybe tomorrow, but either way, it will be there. It will be on YouTube. It will be everywhere. We'll be pushing out on LinkedIn like we do. So again, please send your questions. Yoni loves to answer questions, and he's very good at it. So are you ready? Let's do this.
You got it. Thank you. Okay, a small note about where you can find us. Of course, you can find us at GETIDA.com, but you can also find us in the Amazon App Store. What does that mean? It means we're an authorized solution provider with Amazon. So we have a double commitment. We have a commitment to you, the seller, but also to Amazon, to make sure that we comply with their standards and rules, especially as it pertains to private security, data policy, whereas the data stores and process, who has access to it. So this is kind of also the first tip of the day. If you're looking for a solution for your Amazon business, a good place to start is the Amazon App Store. And why? Amazon has allocated $14 billion to set up this app store and vet the service and solution providers. Needless to say, that Teikametrics, how do you call it? Teika or Teika? I call it Teika. That's my personal favorite.
Teika.
Teika, right?
But you can call us whatever you want to.
Yeah, it's Japanese, so who knows, right? I mean, the Teika part. Yeah, so Teikametrics is also part of that, the App Store. So if you're looking for any solution and you're not sure where they are, where they're from, just visit the App Store. It's a good place to start with your journey on vetting, solution providers. Let's do the next slide. Okay, this is a quick overview of what we're going to be touching today. In regards to FBA discrepancies in auditing and reimbursements. So high level, right? What happens is, once your products you ship them to Amazon, to FBA, to the fulfillment by Amazon centers, it creates a whole chain reaction of things that might go wrong. Okay, some of them you might know about, some of them you don't. We're going to touch kind of the most important ones. There's a whole myriad that we over the years we have found and discovered. We're doing this since 2015, so we're celebrating about 6 years now. So this is kind of the overview of the main ones, and also a little bit about the rules of the game or time limits that is available for recovery. So the first one is the FBA inbound shipments. That's kind of the classic, entry level issue that every seller is aware of. Once you ship your products to the fulfillment center, let's say you're shipping 1,000 units, and once Amazon is receiving the inventory, instead of receiving 1,000 units, lo and behold, they received only 990 units, so 10 units are missing. So once that happens, Amazon's not going to automatically do anything for you, give you money. What they're going to ask you to do is, we're going to touch it in a moment in the presentation. They're going to tell you, okay, you have an opportunity to discover this, that it's missing. Open a case with us so we can really investigate on our end. If we find the units, no harm done. If we don't find the units, you're going to get reimbursed. Okay, we're going to provide a financial reimbursement under their what they call FBA reimbursement policy. Okay, and the reason why they have a policy and they actually reimburse you is because if they don't, they're going to have a major issue with their fulfillment by Amazon infrastructure. They invested hundreds of billions of dollars creating fulfillment centers all over the world for third-party Amazon sellers, and that's the cornerstone of the trust. Because if you're going to send $1 million worth of inventory and they say, oops, we never, we received it and today, but tomorrow it's all gone, and we're not going to give you any reimbursement or recovery or assurances, nobody's going to send nothing, not even a napkin to Amazon. So this is kind of the fundamentals that are in place, because Amazon is a massive, large body, but at the end of the day, it's very fair, and it gives tremendous opportunity for the sellers to prosper on the platform. FBA is just another component. Let's not forget there's also FBM, fulfilled by merchant. So it's nobody's holding a gun against the head of the sellers to choose each option. You choose whatever's best for you. But in any case, in the world of FBA discrepancies, this is what we're going to be touching today in this webinar. Okay, so the FBA inbound shipments, by the way, in the United States is limited to 9 months. Okay, so the moment Amazon receives your shipment, you have 9 months to take care of it if anything is missing. Okay, after 9 months, expired. They're not gonna handle your case. Okay. By the way, if you're selling in the UK, I believe it is 6 or 7 months. It's a bit shorter. Okay, just a little bit side note about that. Okay, then once your units are already inside Amazon's warehouses, okay, inside the warehouse, things can get lost, damaged, destroyed, disappeared, or overcharged, and also between warehouses. If Amazon is moving your products from Kentucky to California, California to Nevada, things like that, things happen there as well. And also between Amazon to the consumers, when orders come in, things happen there as well. Logistically with FBA, also from the consumer back to Amazon, also known as refunds, customer refunds, and also from Amazon to the seller. That's what we call also Amazon removal orders. So all these types of elements, any discrepancy you found, there's a window of opportunity of 18 months, okay, to get a recovery. Fairly long time, I might say, which is good. Amazon's very fair. They're not saying, you got 5 minutes to take care of it. If not, you're done. They give you 18 month window to take care of it, and it's your responsibility to do so. But also there's another unique types of discrepancy that it's more on the financial side, less on the logistical side. It's when and dimension fees. Okay, so for example, if you're trying to sell this phone cover, and every time Amazon picks it from the bin, they package it in a box and they ship it out, they charge a fee for that. They call it pick and pack fee. And the amount of the fee is calculated by the weight and dimension of the product. So the larger Amazon thinks or heavier Amazon thinks your product is, the larger the fee. So if this phone cover is supposed to be, it's less than a pound and less than 10 inches, it's supposed to maybe charge you $2.50 only, right? And instead, they think it's your monstrous size. It's 10 pounds, 100 inches, and instead of that, they're charging you $10 every time they pick and pack an order. So you're financially being overcharged $7.50 per unit. You sold 1,000 units, $7,500 discrepancy. That's the type of discrepancy that we're talking about here. This is limited to 3 months, 90 days. So for the whole year, Amazon overcharged you, let's say $100,000 with pick and pack fees, which are associated with when it dimensions. And in the past 90 days, they only charge you $30,000. That's what you're gonna get back, $30,000. The other $70,000 is gonna fade away. So knowing the rules of the game and the time frames is crucial, and that's why we're doing this quick overview touch before we dive into the nitty gritty of things. Yeah, so that's that for this for the beginning of the way. Okay, this is a quick, run or a look about how it kind of feels and looks like when you try to identify and reconcile FBA shipments. And of course, the first tip and advice here, and this is basic, this is fundamental. If you know about it, great. We're not gonna get stuck on this too much. But if you don't know about it, this is how it feels and looks like. So I don't know if I can move my cursor if everybody will see. I don't know how does that work with go to my PC. I mean, go to meetings.
Oh, do you want me to
I
hand
guess, yeah.
controls
I
over
mean,
to you?
it's okay. I kind of signaled around the one yeah, exactly that area. So once you kind of you go into the Amazon FBA shipments log, you're gonna have a log of all these entries of shipments. So here you just simply have to go over it, right? And with your eyes, look at how much you shipped. For example, you see that classic example. Go to these squares. I don't know if you can see it, guys, but it's small on my screen. Is it big on your screen? Can you even see the number that's in there? But in any case, if you look closer, I promise it says 1,000 units. And the one on the right next to it, it says 990. Simple as that. You see, oh, I shipped 1,000. They received only 990. You have an issue here. That's the first, red flag indicator. And once you see that, you just click on the shipment. You see on the left side is the blue area here next to the digit 1. Actually, you can also click on the track shipment. But once you click it, it's going to take you to this area below. And this is inside the shipment. You'll see that, shipped 1,000, located 990, discrepancy -10. And then you're gonna have this option, like a drop-down menu. You're gonna have to choose a missing dash please research. Okay, once you click on it, it's gonna look like it's gonna say submitted. That's with a little red arrow. And then on the right, you'll see there's gonna be a case ID. Basic, entry level. If you never heard about this before, you never did it, do it now. Q4, you shipped a lot of shipments in. This should be open to reconcile. Usually Amazon needs maybe a week or two, so it's been a little while, and it's still in between the 9 months period. Q4 is finished. Go check it out. You'll find a few units missing. You did a few clicks. You got the money. Boom, money is in the bag. It's in your pocket. Of course, if it's all of this is a headache to any of you guys, of course there's solutions out there. Feel free to reach out. It happens to be that GETIDA is one of them. We'll be happy to help anybody that comes our way. Okay, this is where it gets a bit more sophisticated. All right. Now you need to reconcile all the FBA loss and damage inside the warehouse, in between the warehouses, between all the customers and everything. So I can't really go into the details of everything because it's very complex. But high level, this is what's going on. If you visit Sell Essential, they kind of give you the ground rules, how to set things up. Okay, so they tell you, first of all, the claim window, as we discussed, you got 18 months, right? And then they tell you, before you submit a claim, right, check your inventory adjustment report. So that's one type of report you're going to have to address and download. Okay, and then you're gonna in that report you're gonna have to find all the transactions that got lost, damaged, destroyed, all that good stuff. In other words, they're telling you the first step, find all the minuses, all the problems. Okay, that sounds fairly okay. And then the second step they're telling you, which gets more interesting. Then they tell you check manage FBA inventory report to confirm that lost or damaged items were not was found or restored or whatever. In other words, they're telling you now you found all the minuses, go check all the pluses. Maybe we found it, throughout the way, something got lost, but then on a separate report, something that was found. And then you got to cross-reference and eliminate that minus. So minus plus one is a 0, you're good to go. After you did all that, whatever minuses that are still left, another layer that you got to inspect and audit, which is the reimbursement report. They're telling you, okay, all these minuses that we found, now check this report, the reimbursement, if we paid you under our policy. And if we paid you, eliminate those. And then whatever's left, then you're going to have to bring it to our attention. Okay, then they tell you submit a claim. You open a case, and then over here they tell you how to submit the case. You got to put the transaction ID, the information about the FNSQ, and then you open the case, and they're gonna investigate if they're gonna. So once you do that, actually, they're gonna do the same things, okay? But they have access to more data. They simply do. They're a household with wins. Like a casino, they have all the cards, and they might find additional information, and they're gonna present it to you. Say the recovery was not approved because it was here, there, and there, which is okay. But if they're not, there's no other explanation. That minus needs to be addressed. That's when they're going to activate the FBA reimbursement policy and provide you a reimbursement. Once again, this is an elevated game, and as you build volume, it becomes even more and more complex. As a side note, GETIDA was born as a company from our experience as Amazon sellers. Okay, we started small about 2013. but fairly quickly we grew the business from $0 to $20 million a year. Then we became a part of a larger group that altogether as a group we did about 100 million. And there's simply so many transactions we couldn't just download reports anymore from Excel because it was breaking the files. So we had to build two things. First thing is technology to handle all the mass data, and the second thing is a dedicated service team, which is equally important because finding the issue is one thing, but managing it back and forth, that's a lot of work. So we built these two capabilities together, and that propelled us, moving forward. Okay, and that's very, very healthy and important for every organization to have. So you should build it in-house if you can, if you have resources. But of course, if you don't, the solution's out there. As a side note, throughout our trajectory, growing from 0 all the way to 100 million, we utilize Teikametrics all along the way. So we were forever grateful for, the opportunity to use technology to leverage our game and elevate the game. All right, so that's kind of the high level. How do you reconcile and address FBA loss and damage? So once again, if you do find issues there and you submit cases, you get paid. You have 18 months to look back. You're probably going to hit 2 Q4s, by the way. So this is a double round, double hit. You're going to have Q4 of 2020, but also Q4 of 2019. So hopefully some of you will thank me later. All right, let's do the next one.
We actually have a couple of questions. Let's tackle those before we move on.
You got it.
One person asked that, I guess when they're submitting for reimbursements, they ask for an invoice for proof, but not only are they sellers, they're also manufacturers. So what can they give as proof?
Right. So if they ask for an invoice and you're the factory, so you don't really invoice yourself. So usually what does the trick is what they call a packing slip. You say, this is my packing slip. I shipped 1,000 units, and this is what it is. And usually that should do the trick.
And is your service available for Vendor Central sellers or?
No. Yeah, just a different world, different track. Vendor Central, different reporting, different data, different game. But if somebody has a challenge with that, they can reach out to us later. We can direct them where to go and finding at least some answers to that. We used to have a division for that, but it wasn't as scalable, to be honest, because every vendor uses different data point. It's just a whole, it's more boutique, if you like. So yeah, that's a good question.
All right, continue.
All right, so, all right, Q4 is done, right, guys? But once again, we're gonna hit 2 Q4, 2020 and 2019. What do you do with all these returns, and especially the returns that Amazon deems as on the status? They call it unfulfillable, right? Because you have two types of units in FBA, inventory types, right? You have fulfillable units, which is all healthy, but unfulfillable. So once you hit that status, unfulfillable, there's two options for you as a seller. One option is to dispose it, get rid of it, okay, and lose everything. The other option is to do what they call an Amazon FBA removal order, where you remove the units from the fulfillment centers and you send it back, to your warehouse or maybe another warehouse or wherever it is, and that's it. Then it becomes your problem. So this is kind of a point where we're gonna do some mathematical work here to figure out if it's worth it or not. It's all about the mathematics. If the mathematics make sense for you, and you can identify the opportunity, you should probably take action and you'll be able to win. If the mathematics doesn't make sense, it's okay. At least you know about it. And going forward, if it ever becomes relevant, you should be able to, do yourself a service and apply it. So, some statistical information on this. So, we found out, right, from our statistics that close to 70 or maybe even 80% of the times, all that unfulfillable inventory that you remove from FBA from the fulfillment centers, they're perfectly fine. That inventory is perfectly fine. Nothing wrong about it. Usually, what happens is that some consumers are very sophisticated, and if they want to return an item, they never touched it, never used it, they just change their mind. But if they tell Amazon they change their mind, Amazon might tell them, okay, here's your you want a return shipping label? Yeah, we're gonna charge your credit card $3, $4, or $5 for a UPS label. Then you go, whoa. It's defective. You can change the status, and it's defective. Immediately you get a free label. Some of them are more sophisticated, and they feel comfortable basically kind of making a switch on their decision why they want to return it, and then they know it's going to get a free return. So what happens is when they say that it's defective or something's wrong with it in any way, Amazon's policy and golden rule, which I support, for the most part, is that the customer, the consumer, is always right, even if they're clearly wrong. Okay, so if they're saying there's something wrong about it, once Amazon gets the inventory back to their fulfillment centers, they're not going to inspect it for you. They're not going to verify that it's all good. They're going to say unfulfillable, and now it's up to you to take action. So if you remove it and you find that everything's okay, you can just repackage it, send it back to Amazon, back to the game, and you're good to go. Because of course, if you dispose your inventory, you lost everything. You lost basically the cost of goods, right, and also the opportunity to sell it and make a profit. Okay, so high level, statistically speaking, most units are okay. They're perfectly fine. And here's a little bit of an equation where, to try to figure out if it makes sense or not to take action on it. So, I advise anybody here kind of to take an Excel file at some point and try to do this math. So here we have a little, it begins with a unit cost of $2. The cost to produce an item is $2. And then the second cost is a removal cost. It can maybe cost 50 cents to remove a unit, sometimes more, sometimes less, but I'm taking the average. Inspection, you have labor. Somebody in the warehouse is going to be touching the unit, inspecting it, opening it, checking it, whatever it is. That's going to add another layer of $2.50. Sorry, to $2. Okay, and then you want to resell it. You repackage it, send it back to Amazon. It's going to cost you another $2 in labor. So now your cost structure changed from $2 all the way down to $6.50. Right? Let's mark it up, Liz, real quick. See, the unit cost was $2 on top. Right, and then you add all these layers of costs, and the bottom now it tripled to more than tripled to $6.50. Right, so you applied more resources, at least financial resources and time resources, into taking care of these unfulfillable units. Now let's see what happens if you send it back to the game, back to Amazon. So let's go back to the top. Amazon price is about $19.99, $20. Amazon fees, which include selling fees and all the fulfillment fees, you'll pay by, let's say, 32%. Okay, so net proceeds is $13.60. Deduct $13.60 minus, let's go to the left, $6.50. That's your cost, right? That's your new cost. And that leaves you with $7.09 after all the costs, all the additional costs. So you invested $6.50, you got out of it about $7.09. You more than doubled your money. Okay, granted, it's not as good as a markup, selling, when the cost is $2 and you sell it for $20, and then you make a markup of, I don't know, much more. But at least you're able to get your money out plus profit. Now, if any of you invest in the stock market, I don't know any stock that you can surely know that if you invest money into it, you'll be able to double your money within just a few weeks. And this might be the case here if you do the mathematics and it makes sense. So for this particular example, the mathematics makes sense. And of course, if the mathematics doesn't make sense, and after this, all these layers of costs, you'll find out that you're in a minus. Might as well just cut your losses, let it get disposed, and you move on. Okay, once again, if this is too much of a headache to anybody here listening to this or watching this, there's solutions out there. We happen to have a partnership with a company called Tradeport. On the left side, you'll see over there, you see Tradeport USA. Essentially, what they do is they master the reverse logistics. So, essentially, what you can do, you can send all your unfulfillable Amazon FBA units to their warehouses, and then they're going to inspect the units. If the units are good to go back to FBA, they'll send it back to FBA. But if the units are actually not FBA eligible, they're used a little, scuffy, whatever it is, they're gonna liquidate it for you in other marketplaces. Marketplaces. It could be eBay, it could be liquidation.com, or actually they have a physical place over there where they have local people coming in and buying it off, like a bazaar. So that's another option. And they do, I think they do a rev share. So only if there's a revenue, they split the gain. But the third thing is that if they find that any unit is eligible for reimbursement, they're gonna send GETIDA us the information, and we're going to be able to take action and get you a recovery. For example, you shipped to Amazon this phone cover, our beloved phone cover. I don't know if you ever zoomed in, you'll see that it says my favorite people call me dad. That's kind of the little pop socket that I have here, but that's beside the point. Okay, so you shipped out the phone cover to Amazon, to the fulfillment center, and when you got it back, instead of getting this, you got this used plastic cup. So obviously you got the wrong item back, and you're eligible to get a reimbursement. You present the evidence to Amazon, or we will do it for you if it's coming through Tradeport, and then you'll get a recovery. There's also an opportunity to get reimbursements through this aspect. So once again, to put into context, you're going to be able to, all the removals that you did on fulfillable units in the past 18 months, if there's still any, you should be able to inspect them. And if they're good to go to Amazon, send it back to Amazon, cash it out, cash out the money. But of course, anything's eligible for reimbursement, you should be able to get reimbursed for it. So once again, you are aware of your opportunities and you deal with the mathematics. And if it makes sense, do it, use it, flush yourself back with all this money. It was probably you're gonna. People always know what to do with money that that comes back to them, right? If you invest more into your next product launch or your next PPC campaign, and you increase the bids, whatever it is you need to do to boost and empower your business. Okay, so let's do the next one. Unless there's any questions you want me to address or touch, and anything burning?
Not yet.
Got it. Okay, very good. All right, here we're going to touch an example that will eventually lead us to the weight and dimension discrepancies. But this is just kind of to flush the brain a little bit with the scale and how serious it is, the weight of the pick and pack fees. So here we have a case study of a $5 million seller, right? They do about 219,000 in 2 weeks. That's $440,000 in 30 days. That's roughly about $5 million a year. All right, so lately, a few weeks ago, maybe a month ago, Amazon has updated the interface. So this page that you're seeing right now, this is the page that everybody's working for because it tells you how much you're going to get paid, right? The net proceeds used to look different. Before, it kind of used to look like, I don't know, like QuickBooks. Now it looks whatever it is. I don't even know how to explain it. It's blue and red. It's very strange, but it is what it is. So everybody's favorite part is the blue, but we're going to focus on the red. So I apologize. So you see on the red, you have this fat, thick area there where it just says Amazon fees, very vaguely, Amazon fees. And then a little bit above it, it says FBA fees. You see that? So if I'm just, a regular seller, just looking at this, I would assume that, yeah, FBA fees are not even an issue, not even a concern of mine, right? Because FBA fees, if you take it, you grab it to the right, it's actually point B over there. It's only selling fees B, that's FBA fees B, that's actually the selling fees. It's only $496 out of 219 grand. Seems like immaterial because it's 0.23%. But what we did for you is actually to raise the awareness for you guys is to tell you that the thick fat layer of Amazon fees, there's actually an FBA fee that's hiding over there, and we extracted it out for you. So that's fees type A. It's actually $43,000. So $43,000 divided by 219,000, it's about 20%, right? 19.6768. So these are all the pick and pack fees. Our beloved, pick a unit from the bin, package in a box, and ship it out. It's a heavyweight champion of Amazon FBA fees. Okay, so this is kind of the case study to break it down in percentage. What's the weight of the fees and where is it really hiding? Let's take the next slide. Okay, so high level recap. All right, so you add the 19.7% fees of the pick and pack, and then you have the FBA fees type B, which is all the rest of the fees. And then you have, don't forget, Amazon selling fees. For this particular case study, it's 15%. So which means that 35% of all the seller's revenue are in Amazon fees, which are burning through the margins, right? Because if you look at the heart of it, for the fire, it takes you into the heart of 1.75 million is paid to Amazon in annual FBA fees. So I guess now that I recommend any seller doing this analysis and see what the rate they're in. If they're in 35, are they 38, are they 28, whatever it is, know your numbers. But once you know your number, your percentage rate, now think about it. Let's take this as an example. If I'm at 35%, what can I do to reduce that? That all of a sudden it's gonna be 34%, 32%, all right, or just 30%, because every point is gonna be tremendous, because you're gonna pay less in fees and it's gonna go into your bottom line pocket, right? So that's kind of the mission here with this particular issue. So let's do the next slide. Okay, so tips for that, right? So now we identify that the pick and pack fees are the heavyweight champion. That leads us to a very basic understanding. Now, in the weight and dimension fees are, sorry, the pick and pack fees are based out of weight and dimensions. So the bigger it is or heavier it is, the more I'm gonna pay. So my mission is to make it smaller, lighter, and just be smart about it, right? So, because here we're gonna give an example. One seller may be sending an inflated ball. Let's say it's a beach ball, so it's like 30 inches, and the dimension of 30 inches, they charge you $10. While the same seller, two different brand owners, one of them is, sending it inflated. The second brand owner was competing for this pretty much the same beach ball is sending it in deflated. So now it's like 5 inches and it's all glitched up. They're going to pay a different amount of fees. So of course we have the soccer ball picture here with this ball gentleman. So you have, you can do it inflated or deflated. So if you're strong enough to deflate it with your hands, you can do it if you want. But if not, you should probably use a professional pin. But in any case, the idea is very, very clear. Do whatever you can to minimize the weight and dimensions of your product, because it can save you a fortune in fees. Right, a fortune in fees. Another small example is with the pair of jeans. You can just send it in all rolled up, all opened up, and it's going to be humongous in dimensions. Or if you roll it up and put it in a shrink wrap, it's going to be to the minimal dimensions. It's going to save you also a lot of money. Now, this is a good moment to stop for a moment to think about the meaning of e-commerce, right? Because if you are selling your products in a different domain, let's say brick and mortar, you're doing wholesale, you're selling it to Walmart, to Target, and they sell it on the shelf, I would highly recommend having a different production line for Amazon or for e-commerce. And why? Because the game is completely different. The days, basically in the world of e-commerce, you're not fighting for the shelf. There's no war on the shelf, right? Because in brick and mortar, when you make a product, you want to make it the package that looks shiny, beautiful, big, and aggressive, so you can elbow out the competitors on the shelf. You want the shelf space. Ever thought about potato chip bag? How big it is? You open it, it's full of air. Why? You needed space, on the shelf, so it looks shiny and beautiful, and it touches you to touch it, hold it, throw it in the cart, and buy it. That's the game of brick and mortar retail, which is cool. That game, I have respect to that game. It's all good. But the game in e-commerce is completely different. Your shelf in e-commerce is your listing. Okay, your Amazon, that's your digital shelf. So the way your images look like, the way the content is written, the enhanced brand content, your PPC campaign, how that's laid out, all of that is your digital shelf. That's how you scream and shout to the consumers: click me, check me out, add me to cart, finalize the order. But once you get that, they're sold. Their clients are sold, your users are sold, because no matter what you're going to do and how hard you're going to try to make a beautiful box or packaging, they're always going to get in Amazon's boxes or envelopes with that little smiley, and they're already sold. There's no reason to wow them. Okay, because right now, that moment, they just want the utility. If they're buying a toy, they want the utility of playing. If they're buying a kitchen item, they want the utility of making their food or whatever it is, and you already made the sale. So no, a nice, elegant, and cute packaging will do the trick. And try to make it as small and light as possible. It's going to save you a fortune, guaranteed. So, this
Well,
lessons. Yeah, go ahead.
Well, and managing customer expectation through your listings is also part of that. For instance, if you've got a ball and the picture that you've got is of the ball inflated, but you communicate in your listing that it's going to come to you deflated because that's safer for the ball, it's better packaging, it's better for the environment, whatever you want to say, you can manage your expectation that way through the way you communicate in your listing, the way you communicate in your A plus content, and all that kind of stuff.
Brilliant. I like it. And the reason is that you touch the environment. Also, think about it. The smaller the packaging, the less wasting the resources of the planet on your item level, but also the carton and these envelopes, whatever it is. It's a great point. I never thought about that. And
Well, and
add
when
it to
you're
a
selling
listing.
FBA, there could be several different orders or several different things going into the same Amazon box. If your thing's great big and it has to go in its own box, that's inefficient in terms of the entire supply chain anyway, too. So the smaller you can make a
Absolutely.
packaging, the better off you are.
Absolutely brilliant. Yeah, I'm gonna have to add that layer if you don't mind going forward.
Go for it.
All right, cool. So yeah, this is kind of the idea. Package smaller, lighter, and smarter. We distinguish, the purpose of e-commerce and what's the opportunities that lay down there. If you play it smart, especially if you're a producer or you're a brand owner, you have the opportunity to save and play it smart. So hopefully this was brought into your attention. All right, the next one. Let's do the next one.
I also wanted to say one other thing. I did a webinar with Cynthia Stein not too long ago, and we had a couple comments from people who said that their actual dimensions on their listings had been changed by competitors or changed by bad actors or black hat people.
Yeah, you just spilled the beans on the next slide. We'll touch it in a moment.
Oh,
Yeah. Yeah,
sorry.
that's good. It's a perfect time. All right, guys.
So
Exactly like
you
Liz
should
said
track
it, and she did with Cynthia Stein. So way to go. um, Essentially, once you made sure you're so smart, you created your product to perfectly fit Amazon's mold of weight and dimensions. That's just the beginning of the way. Okay, this is another layer of complexity where you're gonna have to track and the weight and dimensions and what at least Amazon thinks your weight and dimensions are over time. Because if not, they might change. And a few reasons for that. I'm going to touch what I usually call the civilian reason, which is, oops, right? And second reason is more militant, and you kind of touched it. So let's start with the easier one. Is that sometimes from time to time, it can be every few weeks, every few months, Amazon is gonna send your item through a machine that they have. They call it a cubic scan machine. It's a massive machine. They throw it in there. Now, let's say if your product is a handbag, right? And they send it in, maybe there's a strap that's loose. So instead of your bag being 20 inches, that strap is adding another 30 inches. It distorts the dimension of the product. And in turn, Amazon is going to update the information, the weight and dimension information of that ASIN, and that's going to negatively affect you. And that is an honest mistake. Okay. Um, so the lesson is here that, as much as possible, always try to kind of shrink wrap and have it, caps is nothing really hanging loose. Same thing, we can also touch the jeans, right? If it's loose, they scan it, it looks massive. So that's one, reason that's kind of a oops. Okay. The second reason is when you kind of touch dimension is where you're being targeted by maybe a vicious competitor. You're both selling the same product, maybe the same price points, sort of. You're both bidding war on keywords, whatever it is. So we found throughout the years, we're doing this for about 6 years, that amazingly, astonishingly enough, some competitor takes your ASIN, they list it on their Amazon Sell Essential account. They never offer it out. They never actually sell it. But what they do is very simple. They change and update your weight and dimension information. So instead of 1 pound, it's 100 pounds. Instead of 10 inches, it's 100 inches. So all of a sudden, you're being charged quadruple on the pick and pack fees, where they're still paying the minimal fees they're supposed to pay, and for a few months, maybe a few years, you guys are head to head, and you don't even know which hit you, and you're like, something's off with my profitability. It's not even a good, there's always a price war, sometimes it's the rest of the bottom. You're gonna get cashed out of the game, where they're gonna have all the space in the world to continue the run because they played you out. So once again, this is just two reasons. There's a whole variety of reasons that can fall into place. So a prudent seller always checks, and you should check at least every 90 days, because like I mentioned earlier, you only have a 90-day window of recovery if you find that an overcharge was done on your account. And of course, once you find that there's a discrepancy that is not in your favor, you got to take two actions. The first action is update information. So going forward, you stop the bleeding immediately, right, to make your account in good health. And then, like I mentioned, you got to take the 90, open up the request for 90-day recovery. If anybody needs a tool for that, free of charge, visit getida.com/dimensions. It's just, a tracker you're gonna be able to use, and you compare your data, because if you're a brand owner, you should know your weight and dimensions, and also Amazon's data. Let's do the next window. Next slide.
There are also services that I think you can find in the App Store that tell you if any of your listing information has changed. So that's a good thing to enable too, so you can bounce that against the free list that GETIDA gives you, and you
Right.
see.
So
You don't
let's
have
do
to
the
have
next slide.
memorized
Actually, let's jump to the next slide. I might have a window there. Yep. Actually, yeah. So good thing you mentioned. Once again, you're ahead of the slides. It's pretty cool. So if you
Sorry,
need, instead of a
I
template, if
should
you
have
want,
looked.
right. So if you want something more sophisticated, you can actually just go to getida.com, and see on the right side, and number one over there, just click on free sign up, and then you give free access to our technology and our dashboard. And on the left side, on number two, you'll see where it says pick and pack. Right. You click that, and this is going to lead you to this page. And in this page, you're already going to see Amazon's data of each and every ASIN that you have, and then you're gonna be able to track and monitor. Or if you have a lot of ASINs, you'll see a number 4 over there. You can just export the chart. It's gonna have Amazon's data pre-filled over there for you. And then if you actually load it back into the system, and if you want us to help you with this, you're gonna be able to load it up. And of course, if there's any discrepancy that is not in your favor, we'll take action. We'll open a case to update the measurements. So going forward, you'll be okay. And going backwards, we'll help you get a recovery. So we kind of play with the slides a little bit. That's that. Let's go back to the other slide, because there's another tool there that I want everybody to kind of notice. Okay, so we gave the the getida.com/dimensions. That's the winning dimensions tracker. But in addition to that, you also find a profit or loss template, because Amazon's FBA fees and all the other selling fees are important to notice and keep track of. But probably just as important, your entire business structure, right? All the costs of doing business that you have, you should put it on a P&L. You should do it religiously every quarter. We used to do it every month, so it depends on your volume. So if so this is a free template, a profit and loss template. So you'll be able to add like all types of business costs under the sun: salaries, insurances, parking tickets if you're based out in New York City, whatever it is that takes away from your business on a business cost level, all the way down to see what's the bottom line for you, how much you're really making a profit. And so you need to have benchmark for all these costs and all these fee structures, and of course your net earnings, your profits. So once you have a good benchmark, then going forward, you tweak the the levers of each mechanism, and hopefully keep pushing your business to the going up into the top. So a professional seller should always have these tools and numbers in mind. That's your North Star. So free tool, use it. We used to use it, and it was so good that we actually use it to file and prepare taxes. We're always on point, on guard. We just finished the year, Q4. Tax season is in. Great tool to use as well. And so the formulas are in there, and a lot of entry stuff are there. But of course, if you need to add more entries, you have weird types of a cause, add it. No worries. Okay. The idea is same idea. What's the bottom line? All right. Now we're gonna jump 2 slides forward. One we did, and the next one, which is yours, I guess. There we go. Oh, this is nice. You guys prepared this. It's very nice. Okay, so now, okay, we touched a lot about, opportunities as it pertains to FBA reimbursements and auditing, all that good stuff. This is kind of the world GETIDA lives in, and that's our domain. But now we're going to touch maybe what is the aftermath of a good Q4, and hopefully the whole year of 2020, which if you really had a phenomenal year, which a lot of e-commerce sellers did have, there's a whole world of opportunity that's open for you right now. Because the past year, there has been dramatic change in the game of e-commerce, and especially for Amazon sellers. Okay, so before we dive into these points here of why and when to sell an Amazon business, it's important to recognize the new players that came into the game. All these brand acquirer groups that they're raising millions of dollars or tens of millions and hundreds of millions. I believe today there was announced there was another $500 million raise by the the largest player. What these guys did, they paved the way for the Amazon sellers to really have a great option to cash out on their business. And because before that, I remember as a seller, we were doing phenomenal on Amazon, but we always had the fear of having all the eggs in one single basket, right? So of course we sold on eBay, we sold on Walmart, we sold on Shopify. We invested a lot of resources into it, but none of them really had the same explosive impact as Amazon. And with Amazon, we're making a good living. So we built a business, we're making a good living out of it, but somehow you're feeling, why am I building all this for if I can't really cash it out because nobody understands really what I'm doing? That situation or reality is over thanks to these roll-up companies. Right now, you can make a good income selling on Amazon and of course on other platforms. But if your talent and skill and might is in Amazon, and you're making good income, that's a great start. Then you're gonna have the real viable option to build it for a few years, for example, and then cash it out for a good amount. And it's gonna have a liquidity event, a positive event where it's gonna get you make a few $1 million into your pocket, and it's gonna change your life for the better, right? Hopefully. So this is a great opportunity. So really having the eggs in one basket is a viable option. I'm not saying if we should do it or not. It's a whole different argument. But reality is that for many players, it was okay. Some players were 2-3 years on the game. They made a good living. Say 100, 200, 300,000, maybe sometimes millions of dollars are making in net profit from their Amazon business. And when they cashed it out with a great price, and they're off, on their merry way into the sunset. In any case, a few reasons on why and when to sell an Amazon business, right? So I want to give a little bit of a credit before I dive into this. Full disclosure, I do have a podcast. I'm a podcast host, and we did kind of a segment on Amazon exits. And Fortunate is an investment banking firm that helped us kind of with this program, and I learned a lot. And so I want to give credit because a lot of them is from the discussions that I had with them. So I want to give credit when credit is due. Anyways, let's start the first dot here, the first example. So obviously, you might think, I'm making so much good money, a good income with this business, why should I sell? Okay, so you'll find out in life that some people are more lucrative opportunities available. It could be a salary, it can be an investment. Let's say you have a private label business, you're doing $500,000 a year in revenue, and you're making 100,000 in profit, maybe even 200,000. It's all good. But then you have a good offer from Microsoft. They're offering you 200,000, same salary, but no risk for you. You don't have to invest your money. You don't have to deal with debt. You don't have to deal with inventory. You're like, you know what? I want to take that job, right? Salary, right? What am I gonna do with my business? You sell it. Now you have an option. You don't have to just cash out your inventory, leave it alone. You build something, has value, you cash it out. Or some friend of yours comes and tells you, listen, I got this great idea for a great startup, and I don't know which category, whatever, and want to invest. And like, all right, I do. I'm so passionate about it. This Amazon game I'm doing for a few years. I did okay. Let me cash it out and take that money and all this value I built and start a new trajectory. Maybe you'll invest in an app or technology or real estate, whatever it is that it's available to you. So that happens in life. Not every person in business are created equal. Okay. Also, you have reach an operational peak, but the business can still grow. In other words, you are the bottleneck. You're doing 10 million, 20 million a year. Phenomenal, right? But that's it. You're capped out. You're working 80 hours a week. You have a team of X amount of people, and you know that if somebody else comes in and they have the better structure, better experience, they can double, triple the business. So that's a good position for you to sell, because anybody that's buying your business and they can clearly see an opportunity to grow, they'll pay you very handsomely for it. So they're gonna pay you for that potential in future. You don't have to even realize that potential. They're gonna pay for you. They're gonna pay you for that potential, and that's great. So in this kind of example, people have to look in the mirror and really try to analyze what's their role as the business owners or founders or leaders, and did they max out on themselves? And you also got to think about your employees as an organization. Employees, if they have opportunity to scale up and improve their lives, hopefully they get better salaries in the future, better benefits, better bonuses, whatever it is that comes with success and glory. Okay. Also, to consider if a product is in an evolve or die category. Okay, there's constant pressure and risk, and more resources are needed. For example, electronics is a good example. If you have an accessory and you have a $5 million worth of stock, and it's attached to an iPhone, like it's an iPhone accessory, and all of a sudden Apple did an update on their plug, right? Right now we have the lightning plug. Remember these little cables here, right? So all of a sudden they change it. Now you're stuck with all this inventory. You have to update. Okay, you have to change the whole thing because it's the latest model. So usually in electronics, it's always latest models, latest editions. You always have to constantly change it. So it's a evolve or die category. That's what they call. So it's hard for you to keep up. But nevertheless, when somebody that's buying your business is a player in that category, strategic for them, they're built for that. No problem. They're gonna reward you for this potential that you have in your business and your brand at least. Okay. Also the work-life balance. You're overworked. You're tired. You're lonely. You want to reset your life. And this was really amplified in 2020. A lot of nobody can really move anywhere, go anywhere. You're making a good living, good income, but you look in the mirror, say, I'm always at home. I have a whole global team. I never see them. I did well financially, but is this the life for me? If you feel like there's a discord somewhere in your soul, you cash it out. Life-changing event liquidity, and then research your life. Maybe you want to do something in teaching, something in travel, whatever it is. It takes people to places. So these kind of decisions are viable. They happen, and that that is also a thing that happens. Um, Also, we kind of touched it, but this is we're gonna put a bit more focus on this. When you want to materialize your business value now instead of later, so you reduce the risk, you cash out on your investment. So obviously, when somebody buys your Amazon business, essentially they pay you a multiple for your profits. So they ask you, what is your profit now, Mr. ABC? What was your profit for 2020? Hopefully, it's really good because Q4 you took it outside the park. You say, okay, 2020, you made $1 million profit. I'm willing to pay you for this kind of profit for 3 years ahead. I'm going to pay you what they call multiple, a 3-year multiple. I'll pay you $3 million. That's kind of how they evaluate it. So you're selling this, I had a great year, but honestly, I know that this business can do more, but a lot of work involved, but also risk. Things might go up, things might go down. Economics is a battlefield, is a financial battlefield. There's never guarantees. These guys are willing to cash me out and pay me ahead of time and reduce my risk. I'll take it. Sometimes as simple as that kind of a calculation. Um, Also, this comes to marriages. Sometimes you need to break up a partnership, right? If, you're fighting over the things and you can't really get along anymore, so it helps to resolve a business conflict or dispute. Say, before, imagine that you had a Amazon business does a $10 million a year, that's $2 million in profit. You guys are fighting, can't even look each other in the eyes anymore, and all the employees underneath you are suffering because you can't really operate the business. So before that, what do? You just cash out the business, everybody goes home, and that makes the fight even more worse. Now it's like, okay, let's sell it to a third party, wherever it is out there, and whatever his earning is, we'll split the kids. Whatever the split is, 50-50, 30-70, whatever the partnership agreement is, and hopefully the employees will survive as well. Yeah, whoever's going to come in will fertilize the business and keep moving forward. So also one of the reasoning why and when to sell an Amazon business, and this is a touch of samples, is more and more and more. So just keep that in mind. Okay, prepare for selling your business. All right, so quick note, brief review on that. Things to consider if you want to sell your business. It could be to the big aggregators or to anybody that's out there, but these are kind of key components that you should consider and probably set up. So create an SOP, a standard procedure protocol for the entire business. So every single role, every single function it's all written down on paper. So and when anybody buys your business, essentially is buying your car, is your like a business or an Amazon business. It's like a machinery, it's like a car, it's a vehicle, right? And the purpose of the vehicle is to make sales and make profit. So by you writing the SOP down, it's writing a manual, how to use it, how to use the vehicle, how to use the wheel, how to use the gas pedal, whatever it is. It's all written down, so they feel very, very comfortable buying it. Okay, they're not just walking into the unknown. So in addition to that, just create an org chart, an organizational chart with all the roles and structure and the flow of everything. Once again, as a part of the manual. Also identify a mission statement. What is the mission of your business? Tell a clear story. What is the purpose? What is the essence of your business? If you're selling toys, your purpose, your mission is to create the best quality toys, safest for toys, this age group and that group, whatever the story is, make it very clear. So obviously it's going to help your organization. So you always, when you challenge with any kind of an issue, you can always present this issue to your own mission statement. That, because let's say you have two options to resolve your issue and you conflicted. So you check which one fits more into the mission statement. It says, I'll go with that one. That's like your compass. Okay. If that was your compass, obviously anybody buying it, they'll connect to that compass, they'll buy your business. So that's also very important. Also, we touched it before, you can use the profit and loss template, identify every single business cost, give them all the good, the bad, and the ugly. Do not hide anything, okay? So that's very important. But of course, also identify which types of costs can be potentially reduced, okay? It's things that, for example, you're shipping air freight all the time, air. Why? If you could do, freight, sorry, air, like you're selling it with airplanes, instead you could do it with ships, you're going to save a fortune, right? Air freight was kind of an oxymoron. um, in any case, yeah. So if you identify any potential, cost reduction, But also identify which one are maybe are likely to increase. So you give them a heads up. So this, right now the cost of production in China is X amount, but it seems like there's inflation going on over there. Give a heads up. Visibility is key. Okay, transparency is vital for a good exit deal. Okay, and also separate owner's business costs. Your own salary, benefits, and travel and bonuses. Separate that, because essentially when they're buying it off your business, you're gonna get removed probably, and they're not concerned about your cost, so you can add it back as profit. So for example, if you did profit of $1 million a year in your business, but your own cost, salary, benefits, all that good stuff is, let's say, $300,000, you can present to them that the business is worth $1.3 million. You can add that 300,000, so they'll pay you a multiple for that, because you're gonna get removed. These costs are gone. They go back to the profit of the company. So that's very, very important. They usually they call it SDE, seller discretionary earnings. Okay, make sure to add back the SDE back into the mix, and add it to the mix. All right, let's do the next one. How value is calculated. The true potential future earnings is the goal, like I mentioned, right? What is the potential earnings of this business, and for how long, right? So what is the business earning now? Will it maintain? And what's going to be in the future? So it creates this equation of EBITDA, which is earning before interest, tax, depreciation, and amortization, basically your profits, right? Times yearly multiple. Do the buyer believe that they can, replicate the success for a year, 2 year, 3 year, 4 year, 5 year, whatever it is? Okay, that's kind of the fundamentals of things to secure a deal. So you should probably to get a better valuation, you should identify clear options for business and earning growth. We discussed that, right? So if you can identify it, present it to them, and they acknowledge it, say, yep, we can actually achieve it, it's going to improve your price, your value. Also, identify if your business is seasonal, cyclical, or evergreen. It's very important. So even if for a seasonal business, they might pay a lot because they're strategic. They're happy to be a manufacturer of mini Christmas trees. They're okay with that. For example, that might increase or decrease, depends on the buyer. But identify it, whatever it is, identify it. So hopefully, if you meet the right buyer, they're going to pay you more for that. Okay. What is the distance between your business and the competition? Is there a clear moat? Meaning, do you have a competitive edge, which is very, very clear? It can be a patent on the design, on the utility. It can be even your listing. You have 10,000 reviews, and the next runner-up has 2,000 reviews. More value to the business. Okay, so identify those as well. That's your distance between you and the competition, the moat. So you'll get a better premium for that as well. And also, obviously, I guess it goes with that thing. So a strong and clear pitch just creates a higher value. As long as you can really clarify what is going to be in the future for these potential buyers, and it fills their profile, is going to get a good valuation. Hopefully, you get a good cash out. Okay, let's do the next one. We have what, 6-7 minutes? Okay, let's do some boosters, guys. For Q4 booster, there's been a disaster with FBM, fulfilled by merchant, discrepancies. FedEx, UPS, and the post office packages that never got delivered. They got missed. They got late delivery. There's opportunity to file a claim. We cannot help with that, so I'm gonna put it out there. But you can just visit their websites and file a claim. You see number 2 here in the middle. You see there's a stack of envelopes. I literally got this image from a client a few days ago telling me, look, these are all checks I got back from the post office for all the discrepancies. Okay, so you tell them, give them the tracking ID, tell them I never got to this destination, missing whatever it is, you'll get paid. So if you got 1,000 of these that got lost, you paid UPS or FedEx or post office $10 every shipment. That's $10,000 that can be returned back to your pocket. So there's opportunity there. Refund booster from Q4. It's been a disaster. Take action. Identify, claim, and cash out. All right, let's do the next one.
So that is an additional service that you know about that you recommend.
It's not a service. It's for the sellers to do on their own. I'm not too familiar because it's very tedious. You got to find every shipment, the tracking, what happened. But if you find that it never made it to the destination because of that, you deserve to get your money back. So this is A, to raise the awareness. B, you just visit their websites and they have a mechanism for that. And I know for a fact that Q4 has been disastrous. It's been a lot of these cases. If it was very minuscule, I wouldn't bother. But I know that it's been a big issue for many sellers, because also FBM was more prevalent in Q4 of 2020 than prior years because of all the FBM restrictions, ASIN restriction of quantity, stuff like that. So I'm touching this little refund booster element.
Excellent. And there were a couple questions about merchant fulfilled orders and how to find that. So we'll look into that more for those of you. So just feel free to email me. I'll help you.
All right, so let's do the next one. Okay, this is where actually we can help, and this is where we live if needed. But once again, as I kind of discussed, you got 18 months to look back. High level discrepancy rate on a yearly level with FBA can range between 1 to 3%. So if you do about $1 million, your discrepancy rate can range between 10 to to $30,000. But it's up to you to take action and get it. So also, if you open cases with Amazon and they ask for further documentation, like we discussed, they were asking for an invoice or a packing slip, make sure to provide it, because usually they want it for a high ticket claim. It could be a few $100s, maybe a few $1,000s. So you're able to go back 18 months. So you're gonna hit 2 Q4s at this point. Do it. Highly recommend it. It really positively affects the bottom line. Let's do the next slide. Okay, so just if you're wondering what else is there in terms of FBA auditing and why you might need help, so look at this chart, and if any of these issues, discrepancy types are not recognized, it probably means that you're leaving money behind. This is kind of the stuff that we look for. So you can have a look. Of course, if you need help with that, and if you want to take the tears away, GETIDA can take over, and hopefully we'll translate it into money. And we're only going to get paid if we're successful in getting you that value back. All right, so that's a quick look on that. Let's do the next one. Okay, last case study before we finish the whole session today. This is the positive impact of good auditing and reimbursement. So this is a case study of an $18 million seller. I see they sold about 300,000 units, of which 9,000 units got affected, which is about 2.8%. GETIDA will help them get back $151,000, which boosted the bottom line by about 10.92%. Okay, why? Because if you look at the bottom, the gross profit before GETIDA was about 1.3 million. We added about another 151,000, which boosted the bottom line by about 11%. So that shows you the positive impact of good auditing on the net profit, which is really dramatic. But if you look on the left side, let's not forget we discussed selling Amazon business. So if $151,000 was added to your profit, and you're selling your Amazon business, and somebody's willing to pay you a multiple of 3 for your profit, this $151,000, all of a sudden it's worth $450,000 because they're buying that earning, right? They're paying you 3x, 4x, 5x, whatever it is. So if you're wearing the hat of a seller, opportunity there to make more. Every dollar can be worth $3, $4, $5 if you're selling your business. And if you're buying a business, if you bought an Amazon business, you can look back 18 months, and if there's anything that's been left behind, the sellers simply neglected to cash out on everything that's available for them, you can do that, get that money back, and you have a better ROI, return investment. Let's do the next slide. And of course, if you want to give it a little try, we prepared a special offer for Teikametrics followers. You can just visit online.getida.com/Teika500 or Teika500, and the first $500 we're gonna recover for you will be absolutely free. We're not gonna charge you a penny. So you can try us out. If you have a good experience, you want to stay, that's fine. If after you got your $500 you want to leave, that's fine as well. The purpose and mission here is really to help and bring back something that wasn't available to you before. And of course, only if we're successful get paid for that. So we're always happy to indulge the Teikametrics followers and users. And let's do the last slide. And if you need any assistance, any questions we didn't touch so far and we missed out, so my direct email is yoni@getida.com. Feel free to reach out, but you can also visit getida.com. We have a chat box. We have a friendly staff. We're here at your command. So I got another 2 minutes left. I hope I did it on time.
You did great. You did great. We do have a couple of questions. One is that they heard that Amazon takes some precautions to the cases that are open to get a refund for reimbursement, sometimes suspending listings. Is that correct?
We never experienced that. First of all, just as a backdrop, we're an authorized provider. We know how to play the game. So if this is actually a good point why maybe additional help will be useful for you, because if you played it the wrong way, maybe it's your language, maybe just you keep on pounding and they're telling you no, you keep on trying, stuff like that. That's not going to reflect well in your account. So yeah.
Well, in that process, you walked people through where there are 3 different reports you have to look at before you file a claim. If you go after Amazon for money they've already paid you, that's going to tick them off pretty bad. So
yeah, and if you keep on doing it, you got to understand Amazon. You're just wasting their time. They could be spending their time with another seller that's providing accurate cases every single time, and they're okay with it. They're paying them. They don't want to keep telling you no. When another seller needs really help, they need to get paid a reimbursement. They can get that money back, and Amazon is okay with that because guess what? They're going to take the money back, buy more inventory, generate more sales, invest more into PPC. It all goes back into the marketplace. And that's how they want Amazon. That's how Amazon wants to sell us to be at, in that kind of level where touch and go, accuracy, precision, don't waste our time.
We have somebody on the merchant fulfilling front that says when shipments are purchased from Amazon, we cannot dispute a loss through the carrier because the shipment's not theirs. Is that something that some of your clients are experiencing?
If you're asking for the money back from Amazon, I don't think Amazon's going to give you a refund. You're going to have to go back to the
Actually, they're saying that the carrier won't let them dispute a loss because it's Amazon shipment.
I can double check on that. I don't believe so because it's pretty straightforward. You pay $10 to post office. you give it to them, they scanned it in, and they never update on the tracking, they should be able to provide a refund. I would, you might also get mixed results when you're reaching out to the post office. Maybe try one more time with another, service. Customer service provider or a team member, and check it out. But yeah, it shouldn't be an issue. So it's a thin balance. But you saw the checks that I saw the picture of the checks. I believe that was purchased through Amazon. But double checking is okay. So double check. I'm gonna double check on our end. So if you want to reach out, you can email me. But also double check with the post office. Say it's logic. I paid you $10 to ship this. Nothing happened. Please process a return. And usually what they do, I showed you the envelope. They send the check in.
Awesome. And finally, the profit tool, is that behind the login? So you sign up for free and then you can access, or is that on the website?
The template, yeah, that's on the website. You don't have to even sign up. So you go in, you just you provide your email, we email it to you, so you have it. That's pretty much it.
Great. Okay.
Yeah, there's no payment wall, they call it, or paywall, or whatever they call it.
Gotcha. All right, I think that it says when we open a case for reimbursement of a removed item, Seller Central usually comes back automatically with the item as defective, not eligible for reimbursement. Sometimes we're able to do a rebuttal successfully, and we always provide evidence, but lately they refuse to take evidence into consideration.
Yeah, I just want to touch that for a second, just for the sake of accuracy. So I don't want to disappoint anybody, but FBA fulfillment, removal orders that you take back from the FBA fulfillment centers, and they're clearly damaged by the customer, there's no eligibility. Amazon's not gonna, give you a reimbursement for that. So if that's what you're trying to tell, hey, it's damaged by the customer, they're gonna keep telling you in our policy, there's no coverage for that, unfortunately. Really unfortunately, but this is the Amazon game. This is part of the cost you have to absorb to have customers and all these customers. But nevertheless, there's other elements where you can get paid off. Like I mentioned, if you got the wrong item back, clearly an issue. If they're supposed to get 20 units in the box and you got 19 units, so 1 unit missing, clearly an issue. Or missing parts, guys. That's kind of important. Maybe that may be a golden key for you, where let's say you're selling a just for a sake of example, Sony PlayStation console. Okay, they send them back the console, but they sent the 2 remotes, but the actual console, lo and behold, never came back. That's missing parts, so you're eligible for that. Or if you are selling a watch and it comes with a beautiful, presentation box of all these other types of straps and colors, you got the watch back, but all these other straps and accessories and parts are missing. You should be able to get a reimbursement for that as well. So I hope that's been any help to whoever's out there.
Great. Thank you so much. It's always a pleasure to have you. Everybody, thanks for attending. Again, this will be emailed out to you. If you've got questions about reimbursements or how to get the money that Amazon owes you, contact Yoni. YoniM@GETIDA.com. I'm L. Fickenshire at Teikametrics.com, which is kind of a mouthful. So you can email info@Teikametrics.com and they'll find me. Or find me on LinkedIn too.
Yeah, social media.
Yep. All right, my friend. I'll see you soon. Thanks, everybody, and have a fantastic Tuesday.
Have a great year, everybody. Happy selling. Bye-bye.